Hi and a very good day to Dr. Azira. My name is Sheena Tangchiajo, matrix number 281595, and I'm from Group 9. For my part, I'm going to present about the market penetration in China. First of all, what is market penetration? According to Kotler and Keller, market penetration refers to the strategies used to penetrate markets, include cutting prices, increasing advertising and promotional activities, and introducing innovative distributive tactics. Market penetration also refers to a process of infiltrating a market with a service or product in an existing market that already has a current or similar service or product. It will overtake the competitors as well as gaining more shares of that market. A company will calculate market penetration to obtain information about the market size and percentage of consumers who will buy the products and services in the future. It is usually introduced to increase the rate of the product and services usage, encourage repeat purchases, and attract consumers away from competitor or attract current non-user. So, back to the question that is there any possibilities for Malaysian banks to penetrate the market in China? Yes or no? Let's reveal the answer in the next slide. The answer is yes, it is possible for the Malaysian banks to penetrate the market. It is because the foreign banks are allowed to establish either as subsidiaries or branches in China. However, they must operate under the applicable requirement under China laws and regulations governing bank as well. A foreign subsidiary bank is a type of separate legal entity, but it is owned by a parent corporation. It is located and incorporated in other countries and can be wholly owned foreign banks or Sino-foreign joint venture banks, while foreign bank branches are obligated to comply with the regulation of both of the home and host countries. Both subsidiaries and branches of foreign banks are supervised by the CBRC, China Banking Regulatory Commission. Besides, foreign bank subsidiaries in China are basically permitted to get involved in the same businesses as licensed domestic banks. Based on the research of the UITM, their interview data shows that initial entry of the most Malaysian banks have several motivations, and they will change over time. The success of Malaysia's economy suddenly increases the need to push internationally, especially for the last 10 years. Thus, it is strongly believed that Malaysian banks have potential to penetrate the market by providing banking products and services efficiently in China. Now, we are looking to the pros of the market penetration of Malaysian bank in China market. Even the foreign banks are not as competitive and efficient as large domestic commercial bank in China, but the market is still attractive for Malaysian banks as the potential size and the net interest margin may still be higher than Malaysia home markets. Many foreign banks, including Malaysian banks, continue attempting to penetrate China market organically or through acquisitions, since China bank sectors can help foreign lenders as many of their key markets were struggling to grow due to COVID-19 pandemic, for example in Europe or in US. The advantage of market penetration also include the catalyzing the performance and growth, and also improve the market shares by increasing and exploiting the number of new customers in China. Apart from that, Malaysian banks also could ensure the interpretation of existing markets to break users from existing products and services and increase usage of their products and services to increase their sales through growing customer base. The increasing customer base will assure the growth in future for Malaysian banks, and also Malaysian banks given the opportunity to expand their total market serve, including entry into new geographic markets or new market segments, to boost up their sales growth and revenue directly through market penetration in China. Indirectly, Malaysian banks' goodwills of service could be created, and the competitors from entering the market could be discouraged also. For instance, when Malaysian banks offer high-quality services or implement attractive schemes to the customer in China, it may occur too. Besides the pros, there are also some drawbacks. For foreign banks branches, they have more restriction on the business operations of the foreign bank subsidiaries in China, such as they are not allowed to get involved in bank card business and RMB related business. The restriction businesses that cannot be engaged by foreign bank subsidiaries are the issuance of financial bonds and government bonds. Hence, Malaysian markets should be very clear towards the laws and regulation in China before entering or penetrating the markets in China. Furthermore, as mentioned, Malaysia's market will be less profitable than domestic peers, so losses must be taken seriously, especially initial losses which happen frequently to most foreign banks. The persistently high funding costs for foreign banks compared to the local player, which their major funding source was leaning on low-cost deposits in China, was the factors that could arise the probability of Malaysian banks facing losses. Moreover, in case of price penetration, it is harder for foreign banks like Malaysian banks to survive since the new entrant in China's market own a higher cost as compared to existing local bank in China market. Stronger competition or even price war will arise. The drawback of Malaysian banks penetrates China's markets also include the narrow retail networks for Malaysian banks than China banks, which will possibly cause the non-performing loans occur. Other than that, market penetration of Malaysian banks in China market involve cross-border transactions of two different countries, which will expose to a relatively high foreign exchange rate risk that might affect the Malaysian bank assets and liabilities and thus affect the bank performance. Besides that, China's political future is increasingly uncertain and unforecastable lately. For example, a sudden imposed stricter regulation which affected by political instability might fall to foreign banks which operate inside China, and this will weaken the business sentiment of Malaysia financial institution subsidiary in China. As a conclusion, market penetration of Malaysian bank into China market is not impossible as we thought. The pros is still outweigh its cons if Malaysian banks have a stronger management to take over various risks to limit the loss might occur. Market penetration in China market is still considered a good opportunity for expansion and exploitation. I think that's all from me. Thank you.